Let me bring in Dhirendra Kumar, the CEO of Value Research, is going to answer our questions. Dhirendra, the Finance Minister announced inflation-linked bonds during the budget earlier this year. The RBI has just finished that first auction and set the coupon rate at 1.44%. So it was very successfully sold, the 10-year bonds at a real yield of 1.44% over the wholesale price. Inflation index. So tell us what this means and how these bonds will work. So if I as an investor go out into the market and pick up one of these bonds, what will I effectively make on the money that I invest?
These bonds, for all investors, they guarantee that they will be able to, deliver inflation-adjusted positive return. Inflation is assumed to be the wholesale price index, which may not be the finest indicator of the real inflation which a consumer or a saver faces. But right now, the kind of situation that we have seen in the past, that it takes time for interest rates to get aligned. We can have high inflation rates and even supposedly high interest rates and even higher inflation. So our effective rate of return might be negative. If inflation is 10% and our deposit is earning 9%, which it typically does when you buy a senior citizen savings scheme. So effectively, by making this, by investing this money, you are getting poorer, and notionally, you just might be feeling that you are getting a decent 9% return, but your capital gets eroded. So this has the potential to protect your capital to some extent. But I have my apprehensions about wholesale price index being the barometer or the reference.
Well, Dhirendra, there's also some talk about the fact that our principal investment, so if I did invest, say, 1,000 rupees in these bonds, even that principal investment will be adjusted for inflation. Now, do we know as yet how that will work and how these bonds will be made available to the retail investor?
Yes, that is the second part we are completely unaware of, that, if this is meant for public at large, then how will it be made available? Will it be sold through banks, or do people have to turn up at Reserve Bank to buy these as and when they are issued? Reserve Bank has earmarked, has indicated that it will be selling 12,000 crore worth of these bonds. But how will people buy it, and will there be an intermediary? Will it be so? Those things, it's a new product, and I think after the budget announcement by the Finance Ministry and the last policy document, I think RBI has come up with this. There will be some learning curve on the product design. But yes, protecting the capital will be very important, because even if the return gets inflation adjusted and your capital goes down in value, that is not good enough for most people.
So would you recommend then as investors that we consider adding these to our portfolio? Should we be waiting for more clarification from the RBI?
No, I think these bonds look attractive. And if there's one investor for whom the return will be actually tax-free because he has no other income and wants to guard himself against potential decline in capital, then for them this might prove to be a very interesting avenue.
All right, Dhirendra, this other piece of information we must talk about if we're talking about personal finance and mutual funds is that Daiwa Mutual Fund winding up its business in India. Now, the company has decided to sell its assets to SBI Mutual Fund for about 1.3 crore rupees. Now, Daiwa Mutual Fund currently has an asset size of 266 crore rupees in India. Dhirendra, this is not the first time it's happened. It probably won't be the last as well. Should investors of either of these two mutual fund companies be concerned at all?
No, not really, not in this case, but yes, change in ownership of an asset management company is material. When it was happening in case of Fidelity, it was very important, and we have seen the changes, and investors have every reason to worry about it. Who will manage your money? What is their background? What is their credentials? These are questions to be asked. Not this time, because SBI is a very prominent leading fund manager. That apart, Daiwa is a dormant company, and most of its money, it has, of the 260 crore it's nearly 230 crore is in a liquid fund. So I don't think that's a very significant thing. 25 crore in one equity fund is investors that should worry, but movement of that money to SBI, actually I think it's moving into superior hands of management.